Hello, welcome to Any Answers Answered for November 2020. We are, as you can see, back in the studio, but as a surprise, we have a special guest in that Neil Warren is going to be having a look at a couple of the VAT questions that have been asked recently on Any Answers, rather than our usual conversation with Tim Good. So, Neil, first of all, thank you very much for joining us. Our first question is from the wonderfully named Bendy Bod, that asked the following question. A UK company director has moved to the EU, so no UK business premises. It's a limited company client. The only thing now in the UK is the registered office. He lives in Spain, the director, providing services for two clients. One is in the EU, one is in the UK. He's asking, what is the position for VAT registration? Do we have to worry about the fact that the Spanish turnover is more than 35,000 euros? I'm sure you'll tell me why that's important. Or does the UK distance selling rules of 70,000 apply? What do we think?
Yeah, that's interesting. That last few sentences you said there, we've got confusion going on here. 35,000 euros is nothing to do with VAT registration threshold and the £70,000. That is the distance selling threshold as to when you sell goods B2C, when you need a VAT number in the other country. So we need to totally eliminate those because this is a service business and distance selling only relates to goods. So that's the 35,000 euros and 70,000 pounds out the window. The first question we need to ask is, where is the business based? And we've got a link with the UK, which is the registered address at Companies House. That's effectively like a fixed establishment. But the driving force of the business, what we call the permanent establishment, will be in Spain when the director moves there. So straight away we move from UK VAT to Spanish VAT. So deregister from UK VAT, come out of UK VAT completely. And then we ask, what does he need to do in Spain? Now, Spain has got a very, very low threshold. And we know straight away this job in Spain is more than 35,000 euros. So he needs to get a Spanish VAT number, and then he applies the rules that apply to VAT from Spain, not UK. So if he's doing a Spain to Spain job on consultancy or whatever his services, that will be Spanish VAT at 21%, Spanish VAT return. If he's doing, say, for example, still work for a UK customer, then that is business to business from a Spanish business to a UK business, outside the scope of VAT, no VAT charged, and reverse charge in the UK. So the UK customer, who in the past would have got invoices from this guy with his, or this company with a UK VAT number, 20% VAT claim input tax, assuming it's not a partly exempt business, what they'll now get is a Spanish VAT number but no Spanish VAT charge, and they do reverse charge on their UK VAT return. Good news for the client when he gets his Spanish VAT number, even though some of the income will be outside the scope of VAT, the B2B to the UK customer, he can still claim input tax back on his expenses, because what he would be doing would be VATable if it was a domestic sale, so outside the scope with recovery. It's always important when you've got a change, like for example someone emigrating or moving to another country, not to try and confuse things with the direct tax rules, like corporation tax, PAYE, residency, non-domicile, all those things you have in the strange world of direct tax. Focus wholly on VAT and follow the VAT principles. Where's the business established? Spain. What's the Spanish VAT threshold? Very low. Spain to Spain is now Spanish VAT, and UK deregister, and work things through quite logically.
Okay.
Good news as a final point, Brexit 1st of January 2021, no change to any of these arrangements. Good news, apart from the fact that the Spanish VAT number he has won't need to do an EC sales list for the UK sales, because that will no longer be an EU to EU sale, because we'll be out.
And of course, potentially having a Spanish registration rather than UK registration, from the 1st of January onwards, he will still be in a club of 27 countries should he pick up other clients around Europe. So there would be that, whatever the Spanish equivalent of one-stop shop is, that would be possible, whereby if it had stayed with a UK registration, we would have all sorts of different issues with different trading countries, potentially.
Yeah, one little example of that, if he's got a VAT number in Spain and he suddenly does online services like electronic services, webinar downloading software, then yeah, he can get a MOS registration in Spain, deal with the Spanish tax authorities. That's very good. If he was still in the UK from the 1st of January 2021, he'd need to choose a country, let's say Holland. They speak good English there and they're quite business friendly. Register with the non-EU scheme in Holland, having to pay money to the Dutch tax authorities, because obviously once the UK is out of the EU, then there's no EU MOS scheme that we can do. So that's one little example. And yes, if he gets involved with selling goods, then when he's in Spain, distance selling will still apply, which is where this €35,000 figure comes from. But from the UK selling goods into the EU from the 1st of Jan, it's all about duty and VAT when the goods hit the border in the other country. None of this distance selling and threshold. So yeah, that is a big
Could be a very big change for him. Our second question is given to us by NMMS, and Neil and I talked briefly before we started to record about this one, and I can answer Neil on his behalf fully on this particular question. The question is about looking for an Excel template to calculate partial VAT recovery. The situation is, this is a charity with taxable and VAT exempt supplies. I understand we are required to run an annual review and adjust the VAT rate. I am looking for workings template and how this should be done. Now, Neil, I already know the answer to this. Which Excel template should she use for partial VAT exemption? The answer is none of them. You shouldn't use one. Is that correct?
Absolutely, yeah, that's right. It's very, very dangerous when you start using templates and trying to put figures in and hoping you get the right figures. It's a recipe for disaster, because every partly exempt business or partly exempt charity has got different issues to think about. And one of the things that's missing from this particular question is the first point with VAT for any charity or not-for-profit is they've got VAT on their expenses that relate to their charitable or non-business activities, like their good causes, if they're an animal charity, vets fees for looking after animals, that sort of thing. And you take that VAT out straight away, the non-business VAT, you remove it from the equation, and that does not need to be annually adjusted. You know, once you've taken it out, then you've got rid of it and it's gone. So what you are adjusting annually is the business VAT, which becomes input tax, and between taxable and exempt activities. So a lot of charities are partly exempt, so they do need to do it. An annual adjustment is compulsory for any partly exempt trader with a commercial business or a charity, and it's done up to the end of March, April or May, depending on VAT quarters, or the end of March if they're on monthly VAT returns. But the reason that using a template would be disastrous is because you're putting numbers in and there might be other issues to think about. And I dealt with one recently which was using a spreadsheet, and they were putting on conferences in the UK which were VAT exempt, but they were using overseas lecturers and overseas speakers to come to the venues and do the jobs. Well, there was no VAT on those expenses, but they need to be brought in by doing a reverse charge. So you account for output tax in box 1, so the speaker charges you €10,000, put in €2,000 sterling equivalent box 1, and if it's an exempt course, your input tax blocked and you can't claim it, which they weren't doing, so straight away there's an issue there. And the other thing, of course, as well, is that when you do the annual adjustment, you're only adjusting the input tax on your overheads and your mixed costs, not the direct to exempt or direct to taxable, so it's the mixed cost. You need to know exactly what you're adjusting. Then you need to put the right income figures in if you're using the standard method, so taxable sales, ex-VAT, taxable plus exempt. Again, it's very common for people to start putting the gross sales value. So I think the key message I give on partial exemption is to make sure the person who does these calculations know what they're doing and doesn't just do a box filling exercise, because if they start putting in figures onto a template, they'll probably come up with some very strange figures and potentially errors, which might come to light with a big VAT bill or penalties potentially in a few years' time. So I'll give 3 messages on this topic. 1, don't do templates. 2, recognise non-business as separate to exempt and taxable when it comes to VAT on expenses. And thirdly, make sure that whoever does this annual adjustment up to March, April, May knows what they're doing in terms of the principles rather than just putting figures in and hoping it all comes good.
The idea that there is either VATable or this kind of grouping of zero, exempt and outside the scope is such a common misconception, but we have to, as you say, you have to appreciate the things that are outside the scope completely and zero and exempt all have to be factored in separately to these calculations, and therefore we can't just chuck everything in and hope for the best.
Yeah, that's right. What I say to accountants as much as clients is always look at your VAT return when you've done it and ask the question, does it look sensible? And if a business's taxable income is all standard rated, i.e. there's no zero sales or books in there or other things, then unless they're spending money on capital expenditure or they're increasing stock or they're losing a lot of money, then overall the VAT return should still be VAT payable, because the input tax linked to the taxable supplies, the input tax linked to whatever they're doing that's standard rated, plus a bit of input tax on overhead should still produce a VAT payment figure. And a lot of charities think, oh, we're a charity, we get repayments, like that's the automatic outcome. But no, the same principle of input tax linked to taxable supplies is what you claim, and the rest you don't claim, whether it's exempt or, as you say, outside the scope or non-business. Do the figures look sensible? And often they don't.
Always a problem, isn't it? Well, hopefully useful to both NMMS and BendyBod, and also many others who will have very similar issues. We look forward to seeing you in a month's time for the next Any Answers Answered, but for this episode, bye-bye for now.